Well, so we are taking up today fire insurance. Fire insurance. See, I give you latest update on the fire insurance. You may be in touch with the current scenario, what is happening in the market. But what is the current position? Mr. Sudhakar, please mute yourself. Let us see the current update on the fire insurance. This is the latest scenario. See, in previous financial year, general insurance industry collected a total gross premium of rupees 25,666 crore under fire insurance policies. This is only a fire insurance portfolio. 25,666 crore in financial year 23-24. That means a 7.27% growth was there as compared to the previous premium of financial year 22-23. Now what happened? The portfolio increased by 7.27%, but at the same time the incurred claim ratio also increased. Because in 22-23 it was 58%, and in 23-24 it has gone to 78%. It was a reasonable increase. That was alarming to the insurers. So what happened? It has put a strain on the profitability of the insurance companies, on the fire segment. That constitutes around 9% of the industry's total premium income, of say 2.9 lakh crore in FY24. So what the industry decided? Since the losses are piling up, incurred claim increased to 78.33%. Portfolio also increased with 7.27%. Higher premiums are expected because reinsurers' demands for high-risk properties like industrial plants and storage facilities. So manufacturing premiums may rise 10 to 20% due to major claims. Insurers are restricting coinsurance and reinsurance below IIB benchmarks. So this is the latest scenario of the fire insurance. Now you know when a fire policy is given by any of the general insurance companies, all the basic principles of the insurance are applicable to the fire insurance, like principle of insurable interest, utmost good faith, proximate cause, indemnity, and both the corollaries of the principle of indemnity like subrogation and contribution. They are all equally applicable. So today, if you see what kind of fire policies are available in the market, because this fire section is also known as the property and casualty insurance. Before 2021, there was only one policy, that was external fire and special peril policy. But from 1st April 2021, two more policies were introduced, that is Bharat Gera Raksha, Bharat Sukshma Udyam Suraksha, Bharat Laghu Udyam Suraksha, and SFSP policy. Out of that, this Bharat Gera Raksha is meant for residential houses only. So in commercial segment, three policies are available. Solo means in isolation. If you see an umbrella cover, you will find one more policy, that is industrial audits. But in isolation, these three policies are there: Bharat Sukshma Udyam, Bharat Laghu Udyam, and Standard Fire and Special Peril policy. So the subject matter which is covered under the fire insurance policies are very well known to you. There is building, plant and machinery, equipment and accessories, furniture and electric fittings, goods as in raw materials, semi-finished or finished goods stored in warehouse or in open. Goods stored anywhere, either in godown or in open. It may be a raw material, it may be semi-finished goods, it may be finished goods. This is all insurable under the fire insurance and additionally under the burglary insurance. And the pipelines present inside as well as outside the buildings are also subject to insurance. So when these two policies were introduced, Varashukshuddham and Laghuddham, the coverage of the policy was increased. Coverage, sum insured, inbuilt additional coverage, innovative coverages were also there. And there is a slight difference, this SVSU and SVLU. We call it SVSU and SVLU, otherwise this is not a common term for the insurance industry because we have added Siri before the name of the policy, so for us it has become SVSU. Otherwise the name of the policy is Bharat Sukshmudyam and Bharat Laghudyam Suraksha. So when the companies are entitled to add their name in short as prefix before the name of the policy, so say Bajaj must be writing BBSU, Tata must be writing TBSU, like that. So under a fire policy, the word fire is very important. But it doesn't mean this is covering only the fire risk. There are plenty of perils. So 14 perils are insurable under the policy. But of course, the fire word is important because in the insurance parlance, the meaning of fire differs. Here, three basic elements are required. There is actual ignition. The fire is purely accidental or fortuitous in origin. And there must be something on fire which ought not to be on fire. These are the three basic elements where the fire losses are becoming payable. As far as fire hazard is concerned, this is defined as the process of rapid oxidation of a fuel which produces heat and light. So this needs three things: fuel, oxygen and temperature. Then only it becomes fire. But with the latest amendments, without even ignition, the natural heating and the spontaneous combustions are covered under the fire policy. So anything is the source of the fire hazard. Anything means it could be solid, fuel, liquid, vapors, gases. They are all sources of fire because they are all susceptible to catch fire. It may be a board, fabric, synthetic material, packing material, papers, even liquids. They can catch easily the fire. So they are the part of the fire insurance. Now when a fire is taking place, the insurance policy will not only pay the losses caused directly by the fire, but also additional losses which are part of the process of extinguishing the fire. Because when there is a fire, maybe the fire brigade is called, maybe certain operations are used to extinguish the fire. And during those operations also, the damages are aggravated. Means further damages were caused. Say for example, smoke damage, water damage in extinguishing fire, property demolished by fire brigade to prevent fire from spreading, damage done by firemen in executing their duties, losses incurred by insured in attempting to check the progress of fire, how to save property, and even damage to property during removal from a building, burning building, and damage due to falling of walls as a result of fire. These are not direct losses caused by the fire. But since the process relate either to control or to extinguish the fire. So obviously they cannot be stopped. They are part of the process. They are also covered and they are also payable. So when a fire proposal is received, from underwriting point of view, these risk classifications are checked. Construction of a structure, occupancy, nature of flooring, height, floor and wall opening, exposure, lighting, heating and power, layer substitution, protection and time of loss. And I tell you, each one of them is very important. Each one. Because the decision about the acceptance of the proposal or declining of the proposal depends upon these factors. Moreover, the premium rating depends upon these factors. So this classification is very important from the underwriter's point of view. Now, insured is not able to understand existing wording since it is very complex in nature in the external fire and special peril policy. So in these new two policies, the wordings are simplified. Coverage is made complete because a lot of things were available only on payment of additional premium. They were part of the add-on covers. So they have been merged into the basic cover now. There are steps taken to control the mis-selling also. Clarity of coverage is provided and the standardized method of deciding the sum insured is also there now. So as far as the policies, Bharat Sukshma Udyam and Laghu Udyam are concerned, they have already become operational from 1st April 2021 for all purposes by all the general insurance companies of India because these were the policies introduced by IRDA. As far as the package policies are concerned, normally general insurance companies are having package policies and in all those policies, two conditions are mandatory. The one is section 1, that is fire insurance, that has to be taken by the proposer. Secondly, minimum 2 or 3 sections have to be opted as per the company's requirement. So whenever a package policy is sold to any of the buyers, these two conditions are made mandatory. But the important question is when this section 1, that is fire, is made mandatory, so which policy will apply in that case? It all depends upon the sum insured of the fire. Because the sum insured will decide which policy will come into force. Say for example, Bharat Sukshma Udyam Suraksha. This is applicable only up to the sum insured of 5 crores. The moment sum insured is exceeding 5 crores, Laghu Udyam Suraksha will apply. So 5 to 50 crore, Laghu Udyam Suraksha will be there. And over 50 crore, external fire and special policy would be there. But the sum insured is based on value of risk at one location. If the main unit is at different locations, different policies are required because this policy is location specific. Now every kind of risk, say for example industrial, non-industrial, storage, utilities and tanks, these are all subject matter of fire insurance. It is manufacturing risk when there is a production, output or turnover. It is non-industrial risk when there are services like hotel, offices, shops, hospital, etc. It is storage risk either in the closed godown or in open godown when any material or goods is stored. So they are all part of the coverage of fire insurance. Now you have learned already that 12 perils were increased to 14, no deletion of peril is allowed to delete. Sum insured will decide the policies. Up to 5 crore Sukshma Udyam, more than 5 crore Laghu Udyam. Compulsory excess is decided as per the policies like Sukshma Udyam has 5,000 on each claim, Lagu Udyam has 5% of each claim subject to minimum of 10,000. This will differ in case of terrorism. Minimum premium would be 500 rupees plus GST in case of Sukshma Udyam, 1000 plus GST in case of Lagu Udyam. So these are the basic changes made in these two policies which are not applicable to standard fire and special peril policy as on date. So these are applicable only to the Sukshma Udyam and Lagu Udyam. Certain perils are also changed in the policies. For example, the definition of fire was expanded by including own fermentation, natural heating and spontaneous combustion. They have become the part of the inbuilt coverage now. In standard fire and special peril policy, there are still add-on covers which are available on additional payment of premium. But in these policies, they are part of inbuilt cover now. Similarly, bush fire, forest fire and jungle fire are included in the definition of bush fire. But in standard fire and special peril policy, they are still add-on cover available on additional premium. Impact damage definition is changed because aircraft damage is merged. 3 new perils were added: earthquakes, terrorism and theft. Theft has the limited scope because it is not covered in isolation. But when it is followed by another peril, it is covered up to 1 to 7 days. So this makes the total number of perils as 14. Now, no peril can be deleted from the policy. From commencement of the policy till the expiry date of the policy, all the 14 perils will continue as it is. Neither at the request of the insured nor of the insurance company, the peril cannot be deleted during the currency of the policy time or policy period. These are 15 add-on covers still available with the standard fire and special peril policy on payment of additional premium. But almost all of them have been made part of the Sukshma Udyam and Lagu Udyam as inbuilt coverage with certain restrictions. That way the coverage is made complete in these Sukshma Udyam and Lagu Udyam policies, which are uniformly applicable to all the general insurance companies of India. There is no change in the terms, wordings, conditions and clauses. So this is a reflection of what is added, because the architect surveyor fee and consulting engineer's fee has been increased from 3% to 5% of the claim amount. Removal of debris is increased from 1% of the claim amount to 2%. Additions, alterations or extensions during the policy period, except stock, is automatically covered now up to the 50% of the sum insured. No additional premium is required for that. Temporary removal of stock. Temporary removal of stock is also covered automatically up to the 10% of the stock sum insured without any payment of additional premium. Cover for a specific content is covered. Additionally, start-up expenses are covered. Costs compelled by municipal regulations is covered now. Stocks on floater basis covered, preloaded software and stock held in trust is covered. But this stock on floater basis is required to be understood because this is covered without any additional premium only in the Sukshma Udyam, not in Lagu Udyam. First of all, what is floater? Floater means cover for stocks at multiple locations under one sum insured. Say, my plant is at Mumbai and godowns are situated at Pune, Bangalore and Bhopal. So if all 3 locations are required to be covered under the one sum insured, which is the including the basic plant, and the overall sum insured of all these four things is up to 5 crore. No extra floater payment is required. Automatically, those risks will be covered at different locations also and will be covered under the one sum insured. But the moment sum insured exceeds rupees 5 crore, means when it comes under the category of Lagu Udyam Suraksha, that is meant for small and medium enterprises. Sukh Udyam is micro. Lagu Udyam means small and medium enterprises. There the floater charges are applicable. So this is the pattern decided for deciding the sum insured. All property of every nature has to be insured on the reinstatement value. And the reinstatement value is decided on the basis of the current replacement value. Because building, plant and machinery, furniture, fixtures and fittings are called properties. So reinstatement value is required. But for material, that is raw material, stock in process, finished stock, they are all goods. Their value keeps on changing almost on every day because of the process. Raw material will become stock in process will become finished stocks. So when their nature of goods is changing, accordingly the sum insured will be changing. Here the reinstatement value will not apply on the goods. So building, plant and machinery, furniture, fixtures and fittings, they are properties, they are insurable under the reinstatement value basis. Stocks according to the nature of the goods. Bullion or unset pieces, stone or curios or work of art according to the agreed value. Agreed value means value agreed by insurer and insured. Maybe on the basis of the valuation certificate or invoice. So that value will be taken up as sum insured. Now this reinstatement value is a term which needs to be defined. Because reinstatement value means current replacement value. Current replacement value means the value on which the property can be replaced today or reinstated today. This has nothing to do with the purchase value or the market value or the book value or the depreciated value. Nothing. So current replacement value means value applicable today at which the property can be replaced. Here the deduction on the basis of depreciation is not applicable. And for goods, the contract price is applicable. If some goods is sold and if it is damaged before delivering to the customer, if it is insured, the insurance company will pay the contract price, that is the sale price at which the goods have been sold to the customer. Because the exact loss is that sold price. So that is known as the contract price. Now there are 4 innovative covers which are included in these policies without any extra premium. They are part of the policy. And these are money up to 50,000, documents up to 50,000, computer programs, information and data risk up to 5 lakh. Personal effects of visitor, employees and directors up to 3 lakh. And the 3 lakh is divided as maximum 20 people and 15,000 rupees per person. So these all 4 are innovative covers. They are part of the fire insurance policy, Sukshmuddam and Laguddam, not in standard fire and special peril policy. If there is any loss out of them, that will be payable by these policies. Now, waiver of underinsurance is one more benefit given to the insured, but not total waiver. This is restricted to 15% only. In the sense, if the property is not exactly insured on the current replacement value, in that case, underinsurance up to 15% will be considered, and for that purpose there will be no deduction from the claim amount. So insured will not suffer, because that much fluctuation is always existing in the market. You cannot exactly work out the price of building or the plant and machineries or the furniture purchase. 5%, 10%, 15% fluctuations is always there. So to that extent, that fluctuation will be considered and nothing will be deducted if there is any loss. Insured will be paid the loss in full without deduction. But unfortunately, if this underinsurance is more than 15%, in that case waiver will not apply. And the total percentage of underinsurance will be deducted from the claim amount. Then there will be no sharing of the percentage of underinsurance. Say for example, underinsurance is 20%. So the claim amount will be reduced by 20% because underinsurance is there. In that case, this cannot be pleaded that 15% should be waived and only 5% should be deducted. No. That all 20% will be deducted from the claim amount. Now the add-ons which are merged into these policies have got certain importance. Say for example, stock held in trust. So there are some different kind of businesses where the insured does not have insurable interest in that goods which he is operating. For example, a dry cleaner does not have any insurable interest in the clothes which is dry cleaning, and that is his business. Because those clothes, tapestries, curtains, carpets, those all belongs to the customers. But suppose there is a fire or the blood loss in his shop and the entire goods is damaged. So the owners will file the claim upon him and he has to pay the compensation. Similar is the case with the motor vehicle garages. In the garages, the garage owner is having the vehicles of other owners. As the fire is there, the vehicle of other owners will be burnt. But since they burnt in his garage, he becomes liable to pay the claims. So now the Sukshma and Laghu policies will cover these risks because these are the stocks held in trust. It may be raw material, packing material, stock in open, finished goods, semi-finished goods. They are all covered. Similarly, additions, alterations or extensions made during the policy period. If they are intimated to the insurance company and difference amount of premium is paid, maybe this sum insured has increased, the rest will be covered. Now the difference between these two policies can be understood. That the Sukshma policy is having only the sum insured limit of 5 crore. More than 5 crore, the sum insured will be insured under the Laghu. Compulsory excess is defined for both the policies. Start-up expenses are defined for both the policies, that is 1 lakh in Sukshma and 5 lakh up to Laghu. floater charges are free in Sukshma Udyam, but in Laghu Udyam they are chargeable. Minimum premium also differs. Now other features are important because during the policy period, the sum insured can be increased if at any fine morning the insured observes the sum insured is not adequate. He can get the sum insured increased by paying the difference amount of premium. But this is possible only when there is no claim on the policy. And nothing can be changed, not even the compulsory excess. Not even the compulsory excess. So the add-ons currently being used are also merged in this policy. Compulsory excess in case of terrorism differs slightly, and that is because the terrorism risk is directly dealt with by the terrorism pool. Now we have got certain add-on covers approved with the IRDA, and these add-on covers differs company to company. Even premium rate of these add-on covers differs company to company. So we have got 8 add-on covers with this policy which are available to sale. There will be additional premium to each add-on cover, but they are useful. This is something you have to tell the customer that we have got these add-on covers, so whatever is required by you, you can take it, because none of them is mandatory. All are optional, each has the separate cost, and these are the installment protection up to 50,000 per EMI, claim preparation cost, loss of rent, additional expenses of rent for alternate accommodation, and then accidental damage cover, involuntary betterment, expenses of loss minimization, and escalation clause. These are the 8 add-on covers available with us. Stocks at many locations on floater basis can be covered without any cost in the Sukshma Udyam policy. Now this policy can be taken by the owner, of course, or the entrepreneur. But if there is change of insurable interest, then obviously the proposal will get changed. Say suppose the farm is given on lease, so lessor will take. If it is sold, then the buyer will take. If it is given on rent, then the tenant will take. But in case of tenancy, the building will not be covered because tenant has no insurable interest in the building. All fire policies are subject to restoration of sum insured. That means, if during the policy period any claim of any amount is paid, sum insured will be reduced by that amount. There may be possibility that in the unexpired period of the policy, there is additional claim, maybe more than one claim. So the possibility is that since the sum insured has already got reduced, the claim amount can be deducted. So it is always better to get the sum insured restored by payment of difference amount of premium. And that should be done. That is in the interest of the customer. Now changes in the package policies is also done on the same basis, but it is on the automatic mode. If we are giving a business protector policy or shopkeeper or office care or hotel and restaurant or educational fee, section 1 is mandatory, that is fire insurance. So according to the sum insured limit of the fire insurance section, the software will automatically generate the policy concerned. Now this policy cannot be issued by the branches. Why? Because the branches are not authorized to issue this policy. The premium calculator is not provided with the branches. You have just seen there is a competition on the pricing. Because the discounting has gone 90, 95 or even more than that. That is directly impacting the balance sheet of the insurers. Because the profitability has gone down. claim ratio has increased. Though the fire insurance portfolio is increasing year on year basis, portfolio is increasing, growth rate is there at the same time, and claim ratio is also increasing. That is directly impacting the profitability of the insurers. So the competition is on the pricing, and pricing has to be restricted. Even there is a possibility that the prices may increase between 10 to 20% in the next financial year. So that is the possibility in looking to the trend of the insurance market. Now, one more important thing is STFI rates applicable from 1st January 2025 have been provided to all the branches, and you must have got them. Even the earthquake rates are provided, IIB rates are provided, and no company will be ready to issue the proposals lesser than that rates. So the portfolio will increase, demand will increase at the same time. The competition would be on the pricing. So underwriters are taking the precautions to control the profitability of the companies. So this is the trend in the fire insurance section now. But if the sum insured is more than 50 crore, all these benefits are not there because the standard fire and special peril policy does not have these benefits. That policy is the same. IRD has made no change in that policy. Same add-on covers are there, it is available on additional payment of premium. That policy is issued for more than 50 crore. And if the demand comes from the corporate segment, they may prefer the umbrella cover or a compact cover, which is also having the policies like FLOP, machinery breakdown, EI coverage, burglary sections. So that is already available in the industrial all risk section. But looking to the market demand, 90% market is covered by these Sukshmidam and Lagudam policies because maximum proposals are related to the sum insured up to 50 crore only. So this is all about fire insurance. If you have questions, we will discuss now. Any questions?